Good morning. Today we are going to talk about the second table or the second account, which is balance of payments account. As we said last week, balance of payments is concerned with transactions with the rest of the world. Before starting the balance of payment, just recap we are going to recap what we did last week, which is the national accounts table. National accounts consists of two main parts, absorption and current account. Absorption is classified into consumption and investment. Each one of them is divided between private sector and government sector. While current account is divided into four main parts. Number 1, export of goods and services. Number 2, imports of goods and services. Number 3, income from abroad net. And finally, number 4, transfers from abroad net. This is the form of a balance of payment. Balance of payment is classified mainly into two main parts. Which is current account and which is capital account. As we said, balance of payment records all transactions between the residents of the country and the rest of the world in terms of selling and buying of goods and services, international flow of funds in terms of foreign direct investment and or in terms of investment in fixed assets and financial assets. So balance of payment will be divided into current accounts, capital and financial accounts. Current account includes number 1, trade balance. Trade balance is related to merchandise or goods. Export of goods, import of goods. So it's calculated as summation of export and import, each one of them with its own sign. As imports are recorded negatively, returning back to this table, you can witness that export of goods is positive, while import of goods is between two brackets. This means that the value is negative. So we can write it as a negative sign or between two brackets. So trade balance is the summation of export and the import, each with its own sign. Number 2, services net. This is related to export and import of services and is recorded as a credit side and debit side. So it's calculated, if you would like to find the net, it's calculated as the summation of credit and debit, each with its own sign. As you know that credit will be positive and debit will be negative. So you are going to add both of them together. Number 3, income net. Income from abroad. It's also calculated as credit minus debit. Credit equals primary income that economy receives from the rest of the world. This can be in the form of employees' compensation, earning on foreign direct investments, income from property, interest rate for bonds that you are going to buy in another country, and so on. The debit side is the payment that a country is going to pay to the rest of the world. So income net will be calculated as credit plus debit, each with its own sign. Income net in the balance of payments is equivalent to income from abroad in national accounts. Number 4, current transfers. Transfers are transactions in which one institutional unit provides goods and services on an asset. This is transfers of cash. It can be cash or in kind. such as grants, donations, gifts. Current transfers can be official or private. Official is from one government to another. United States is going to give a donation to Egypt, give a grant to Egypt, and so on. With respect to the private transfers, it's like worker remittances. If you are going to work abroad and transfer your money income to your family in Egypt, this is worker remittances. Current transfers net is calculated as private transfers plus official transfers, each with its own sign. It's going to be recorded negatively or positively based on which is greater, what you are going to pay to the rest of the world or to get from the rest of the world. Current transfers net in the balance of payment is equivalent to transfers from rest of the world or from abroad net in national accounts. Then we have to calculate current account balance, which is a summation of trade balance, services net, income net, transfers net. Account number 2, capital and financial account. Capital and financial account is related to transactions in assets, whether financial assets or fixed assets. Number 1, it consists of number 1, capital transfers. Capital transfers is gifts for the acquisition of fixed assets. Say, for example, I'm going to give you a donation in order to buy a fixed asset. Or it can be gifts in kind. This is number 1, gifts in cash. It can be gifts in kinds, which is goods and services. Or I'm going to give to write my own office to you, changing the ownership of the fixed assets. Okay, this is gifts in kinds. This is number 1. Number 2, direct investment. Direct investment is related to fixed assets, foreign direct investment. You are going to sell and buy foreign direct investment. Of course, it can be positive or negative based on which one is greater. If you are going to sell to buy in another country, or other foreigners are going to buy in your home country. Portfolio investment. Portfolio is related to purchasing and selling of bonds and money market instruments. Also related to securities in general, other long-term capital. It's also related to securities. Also related to securities, short-term capital. If you are going to buy only short-term securities, bonds and stocks. These are the main components of capital accounts. So it consists of five main parts: capital transfers, direct investment, portfolio investment, other long-term capital, short-term capital. Then we have to calculate the capital account balance. Capital account balance is calculated as capital transfers plus direct investment plus portfolio investment plus other long-term assets plus short-term capital. Now we would like to calculate the overall balance, which is a summation of capital and financial account. But in some cases, there are errors or omissions. The data may be inaccurate. This can be reflected in an item known as errors and omissions. Omissions means ignorance or neglecting something. So in order to calculate overall balance, it's going to be calculated as current account balance plus capital account balance plus errors and omissions. The result can be a surplus or deficit. This depends on the sign of the overall balance. If the sign is positive, so the country has a surplus in balance of payment. If it is negative, the country has a deficit or witnessed a deficit in the balance of payment. How to finance overall balance? Finance of overall balance will be represented in the balance of payment as a change in net foreign assets, which means that you are going to pay or receive foreign currency, a stock of foreign currency. This is net foreign assets. Or special drawing rights. This is also net foreign assets. So the sum of foreign assets of the monetary authority and deposit money banks minus any foreign liabilities, this is the change in net foreign assets. This can be found in balance of payment and also in monetary survey. Later on we are going to talk about it. A change in arrears. If a country is taking a loan from another country, so they have to pay interest monthly or annually for this loan. But in some cases, the country is not able to pay this money, so they have something known like arrear, a stock of outstanding debts. If you are not going to pay on time, so this arrears is going to increase by time. And this is the last point in the balance of payments. Now we would like to solve a problem related to national account and balance of payments accounts. The following two tables represent balance of payment and current account of the Egyptian economy for years for the fiscal year 2003 and 2004, required to fill in the missing data. This is balance of payments and this is current account, required to fill in the missing spaces. Okay, let's start with current account.
Consumption is divided between government consumption and the private consumption. So if you would like to calculate private consumption, it's going to be calculated as total consumption minus government consumption, which is $29,200,000. The same with respect to investment. Investment will be calculated as please open part 2 of the lecture in order to be able to complete this schedule. Thank you. We are going to fill in the missing spaces. Total consumption is 342,000. Government spending or government consumption 50,000. So in order to find private consumption, it's going to be calculated as total consumption minus government consumption. 342,000 minus 50,000. It will be 292,000. The same with respect to investments. Investments, total investment 79,600. Private 37,100. So we are going to calculate it as total investments
minus private investment, we are going to get government investment, which is 42500. Absorption. As we said before, absorption is the summation of consumption and investment. So we are going to add total consumption with total investment. 421,600. Then we would like to calculate export of goods and services. In order to find the value of export of goods and services, we have to refer to the balance of payments. Here is the balance of payments. So we are going to add export of goods and export of services will be added together. Export of goods plus export of services. It will be 10,452.5 plus 3755.2. So the total the exports of goods and services will be 14,207.7. The same with respect to income net. In order to calculate income net, we have to refer to the balance of payments. Income net will be calculated as credit plus debit, each with its own sign. Credit and debit with negative sign, credit with positive sign. So the value of income net will be 4,230.8. For 230.8. Transfers net is given. Then you have to calculate GDP. As we said, GDP is calculated as C plus I plus X minus M. It will be 416,853.2. Once again, consumption plus investment plus X minus M. GNP. We are going to add to GDP the income net. This will be GNP. It will be 421,084. It's GDP plus income net. And finally GNDI. It's GNP plus transfers net. It will be 425,018.1. This is national accounts table. Now we are going to move to balance of payments. Trade balance. We would like to calculate import of goods and total trade balance. If you know from the national account that import of goods and services equals 18,954.5, and you know that import of services is 668.2. So you can subtract import of services from import of goods and services to find import of goods. It will be 18,286.3. Once again, it's calculated as from the national account table. This is import of goods and services. We are going to use this value and import of services to find import of goods. It's going to be calculated as import of goods and services minus import of services to find import of goods. Then you have to add export of goods and import of goods, each one with its own sign, to find trade balance. It will be negative 7833.8. And the two brackets means that the value is negative value. Services net. Services net is calculated as the summation of export of services and import of services, each with its own sign. So it will be 3087. Then income net, we calculated income net before. Transfers net. As we said, transfers net is the summation of private transfers and official transfers. But official transfers is missing. So we can find transfers net from the national account table. This is transfers net. We can use transfers net as 3934.1. Now we can subtract private transfers from current transfers net in order to find official transfers. It will be 888. Current account balance is calculated. Capital and financial account balance is calculated. Portfolio is given. Missing direct investment. Other long term is given. So we can calculate direct investment as you know, capital account balance equals portfolio plus direct plus other plus short term. There is no short term in our example. Other is given, portfolio is given, and balance is given. So you can subtract portfolio from total and other from total to find direct investment. It's gonna be 251.5. Errors and omissions is given. Overall balance is given. Required, the last point, is to find a change in net foreign asset. A change in net foreign asset, as we said before, it is used to finance overall deficit or surplus. So it is equivalent to the value of overall balance with an opposite sign. So here we have a deficit in the overall balance. This deficit will be financed by positive 158.3. So it is the same value with opposite sign. This is the end of our lecture today. Thank you.